Hello and welcome to this special show. The big question on everyone's mind is, are we in a structural, secular bull market? The evidence is lacking. Markets have done very well, but the underlying economic reality is still pretty slow. I've got somebody with me here who's got very incisive observations, and he's good at making predictions as well about both the markets and the economy. Pankaj Vaish is Managing Director, Markets with Citigroup, South Asia. Pankaj, thanks very much.
I'm good to see
for
you.
Being here. And I hope you will make some predictions here.
Now you're putting me on the spot.
So, do you think there's a wide gap between what markets have done? The Nifty, for example, is up some 60% plus from the lows last year, and the underlying economic reality.
No, but markets are not supposed to go day by day with the underlying economic reality. They are supposed to run ahead, both on the upside and the downside. So I think that's fair. That's the nature of the business, and that also provides the necessary funding and resources for new companies, and even for older companies that want to raise additional funds. So I think that's exactly what it's meant to be. It should run ahead. It should say that if things pan out correctly, if all the ducks get lined up in a row, then numbers will look very good down the road, and that's how growth companies get to raise funds. So I think it's well justified. Of course, the reality on the ground gets determined by human interaction and opposition to those efforts. So clearly that will be a slower moving function. So I don't see much of a disconnect. I think it's just the nature of the relationship between the real economy and markets.
The big change which has happened is the new government, of course, right? I mean, even before the new government took charge, it was the imminent taking charge of the new government which really propelled the markets the way they did. Now that we've had some time to observe the government and what they've done, what's your view? Has it essentially been broadly in line with what markets and private enterprises wanted?
Yes, I think so. I mean, I think clearly, and in a comparison to what we went through the prior 2 or 3 years, it was obviously a big sigh of relief to get a decisive mandate, to get a government in that seems to be very determined to do business, has clearly rolled out the red carpet for investors to come in, frankly, both domestic and foreign. So, and Mr. Modi has done a remarkable job in all his trips overseas in terms of attracting people to India. So I think that bit has gone fine. Some valid questions were being raised even by some of our FII investors in terms of action on the ground, in terms of decision makers. Some of the players hadn't changed. They were still a carryover from the prior years. So there was this small murmur that, are those people really going to be able to bring about change? And I think, again, the government sort of saved the day by doing pretty dramatic purges and changes in the lineup. This new expansion, I think, is helpful because poor Mr. Jaitley was doing 3 jobs instead of 1, and 3 heavy-duty ministries. So this makes sense, and they brought in some new talent. So I think they're doing all the right things. It's like every 6 months you need to jolt the system, and that's how people realize that there is a decisive person in the Prime Minister's office who's very keen on shaking up the system every now and then. So that was important. I mean, I've said this in prior interviews that with the kind of mandate that the NDA government came in, business as usual clearly was, even if it's much better than the prior government, is not good enough because people have clearly voted their aspirations. I mean, it was a pretty emotional, for me, a moving election, and I've used the term it was a social revolution because prior to that, TV commentators had always looked at elections in very casteist and religious terms, and you had a sort of an Uttar Pradesh giving 71 seats to BJP and blew all these political pundits out of the water. I mean, to me, it was just a clear manifestation that young India, with 120 million new voters, were saying, we don't care, we just don't worry about these politics and religious stuff. We want growth, we want jobs. And the Prime Minister, this current Prime Minister, has obviously appealed to that sense. So it's good that every 6 months they're doing a shake-up.
In terms of actions, he's matching up.
I think so. I mean, so far they have. The next budget will be the big one to see how much they convert into more action. The prior one, I think they had only, 45 days. But so far, the decisiveness with which they have moved, the business-friendly talk that they've given at every forum, be it the Prime Minister or the FM, even the new Minister of State for Finance has made a few comments initially, and they all seem very business-friendly. The Commerce Minister, she's been out there on the road meeting a lot of investors. So it's a good lineup. It's a business-friendly lineup, and it's nice to see that every few months they will keep doing some dramatic things, because that's what the young electorate wants them to do.
Pankaj, I know it's too early, but have you thought about, say, 5 years down the line, if you're sitting and talking about what has happened over the last 5 years, how do you think, have you thought about that? What kind of economy will we have? Will we have a completely free, for the private sector kind of economy? What role would the state play?
In a country like India, Prashant, you cannot say you'll become a United States in 5 years. That's not something that I think we can really aspire for.
Will it be China?
Well, I hope not. I mean, China is really not the model for us, and it has its own problems. Just absolute economic growth is not the yardstick. I think we have to make sure it's inclusive growth, it's a sensible growth. It's not just factories producing widgets day and night at the cost of environmental causes. I don't think that's the model for us. I think the society here is quite vocal. It wants to participate. It's noisy, and it's good that our leaders are homegrown, grassroots-oriented leaders, and so they have to appeal to that. The combination of that with modern finance tends to be a difficult one, and many third world countries have had a problem with that.
Yes.
And frankly, I think even prior governments struggled with it a lot and would keep falling back on very populist measures, the kind that you used to see in Africa and Latin America. Those are not our role models, and I think they really didn't reinvent themselves enough. But this new administration has realized that they need to combine the two in a modern outlook.
Do you think it's possible?
Yeah, I think with the lineup in the government as well as in the Reserve Bank, it's a very, very good combination. And I think this will attract, we've already heard a lot of compliments from investors around the world. If they stay on the job and they don't get distracted, then I think this is one of the most powerful combinations you can see currently in the world anywhere, between the government and the central bank in terms of making sure that we reach our potential.
The basic thing is getting growth back, right? I mean, that's what everybody has their eyes on. How do you think growth will come back? Markets won't let government spend. The RBI has sort of set rates high, and and rightly so, and they've sort of kept it high for a long time. So who's going to do the spending? Private sector is looking at the government.
Well, actually, it should come from the private sector, right? We've gotten used to the government spending sort of getting us out every time, and that's just not. Again, that's only part of the transformation and the learning, I think, for the whole community. That's really not the source that you should be looking at all the time. There is enough entrepreneurial spirit in India. There's enough domestic demand in India. We are blessed. We are blessed with the right demographics on the domestic demand, that we don't constantly have to keep looking at G10 and saying, what's their import demand like, and will we meet the next quarter's budget? We don't do that. We have enough vibrant consumption of our own. So where it will come from is the private sector. What we definitely need to do, and the exuberance in this.
Why will the private sector invest? I mean, they have to have some visibility in terms of demand rising, right? Which is not happening. I mean, actually, real rural wages now are negative, marginally negative over the last, I think, 2 months or so. Urban consumption has been stalling a little bit. Companies aren't expanding. Private sector isn't really going all out and hiring, right?
So that's the current situation you're describing. In fact, rural wage growth slowing down will probably be good from a central bank angle, from being able to lower interest rates. And we can get into the interest rates discussion in a second. But just to come back to your central question, private sector is also supposed to be forward-looking. It gets its financing with the exuberance in the market. We've done a lot of debt issuances for top-notch companies. In fact, some even middle names. Same thing on the equity side. So financing is very easily available. You can see on the e-commerce space, for example. I mean, the balance of power is completely in the opposite direction. There's investors with checkbooks open chasing promoters and saying, "Can I get into your next round?" That's exactly how the system is supposed to work. entrepreneurs do take risk. This is not something new for them. They make forecasts and say, we think demand will grow as interest rates come down, as people's positive feelings about the new government, and they start taking a little more risk. Home ownership should start rising again as interest rates come down. And we will be able to sell goods. I think that's just the way the cycle is supposed to work. If they're taking risk for the first time in their lives, they would not be promoters of big companies. In terms of the central bank, I think they realized that CPI had just been high for a very long period of time, and we had just gotten used to it. And I think they too wanted to, and knowingly, they said, let's aim CPI headline and let's try and there was a lot of criticism around it. We too raised some questions saying, is this the right thing to target? But they're on an experiment. They're on a path, and they might as well finish that path. I actually don't want them to be pressured now. I think they should be left alone to finish the experiment so that they never can say, we really couldn't complete the experiment, right? Let's see it through. Let's see what happens. We also got very lucky. I mean, with global oil prices coming down, and something that I don't know why it never struck anybody before was in the face of a weak monsoon, just release a lot of food stocks. That's not a rocket science idea. It's a very simple idea. Somehow it wasn't done before, but this time it was done. Good stocks were released. So you have food inflation and fuel inflation come down dramatically. Like I said, we got lucky with the big shale revolution, and going back to global stuff, that is one of the biggest stories for the next 10 years. I mean, our global economists, global commodity strategists think that United States, that's the biggest delta that's taken place. They're going to become a net exporter. That'll be very dollar bullish. And oil will go down to $75 a barrel. And those are very big, dramatic things. I keep telling my team, thank God that the shale producers in North Dakota or the ISIS warriors don't know about our monetary policy framework, are completely oblivious of who these characters are. And we've got lucky. I mean, crude oil prices came off, food came off. So in the deceleration that we've seen, about 3.5 percentage points in CPI over the last 12 months, 2/3 of that is from food and fuel, which is obviously beyond central bank control. But anyway, they stuck to a framework, and they're very smart people. Let them see the experiment through. Once they're convinced of what they control and what they don't control, and the experiment, along with coincidence, has worked out well, then that will open up some space for interest rates to come down. And you can see this year the inflows into debt markets have been bigger than they've been into the equity market. Our FI investors are constantly knocking on the door saying, can I get some more limits? They're going into corporate bonds. I mean, the spreads of corporates to govies has shrunk a lot. These will all turn into useful things for the underlying economy also, because the cost of financing for a lot of these companies has gone down dramatically. One of the reasons why loan demand, people talk about this, that the loan book is not growing. True. It's also partly not growing because right through the capital markets, people can raise money much better, and so that is going on.
To banks.
Yeah, and so that dramatically lowers cost of funding, and it would be in excess of 100 basis points. All of those things matter, and I think that will be the catalyst, that'll be the spark, and then it creates a good virtuous cycle of its own.
I'm going to come back to interest rates, but the current expectation that the RBI is going to cut rates sooner than what was expected, maybe sometime early next year, you think that's misplaced, or it could happen?
See, I can't really look into their minds. I think, like I said, they might as well complete the experiment. Don't rush it now, because then you don't want to have to, how do you start a clock of a 2-year experiment again?
But if I ask you, rate cut first half next year, or maybe only beginning of 2016?
No, I think it should happen first half. Some people have started thinking December. I think not, but again, I don't know. They might even enjoy surprising the market a bit. But I think they might as well just wait and do it I think our economist is looking at March of 2015, after the budget is out and they've seen what contours the budget is taking in terms of fiscal deficit growth. They might as well see that and do it in March.
I come to the central question, which is, will lower interest rates really help? I mean, if I can get a housing loan from a bank 50 basis points lower, I won't go out and buy a house because of that. I guess neither would most other people, because I would go ahead and buy a house if, I can see my salary going up and I can see job opportunities. It's true with most people. So how would it really help? And I can make that same...
So you're right. I mean, clearly, job growth is probably the single biggest thing. If you don't have a job, you're not going to buy a house. And that is why the focus on job growth has to be one of the biggest challenges that the government has to address. And I know that the governor at RBI is quite mindful of it, because when he was the chief economic advisor, he wrote a whole chapter on job growth. It is probably the single biggest structural macro issue that we have, that we've not dealt with over the last several years, and that we do need to attack. And again, here the government can do only a few things. We just need to make sure that our small and mid-cap companies that come up, they need to start growing into the large companies. That on a massive scale hasn't happened. The tech sector did that, but in a lot of other sectors that hasn't happened. So all you can do is unclog the system and make stuff available, infrastructure, everything available as easily as possible. So that risk-taking culture, which does well at the initial stages, from there to mushroom into a $10 billion company plus.
Actually, I was talking to somebody very senior in IDFC, and this gentleman said that people are wrong when they say that infrastructure will take the lead and will actually lead this economy out into a recovery. I mean, they said it's just not going to happen that way. It still has to be consumption. So it kind of brings us back to where we started.
So I think infrastructure is a necessary ingredient in the whole thing. You see, infrastructure is needed to get a lot of the logistics. I mean, e-commerce is hot right now. It still is going to move its goods on trucks, and
yes,
it does need all that infrastructure. So I think that is important. But coming back to your question about interest rates, yes, maybe 50 basis points will not, but 200 will. It will move somebody who's sitting at the edge, because I've seen this whole cycle play out in the US. Now that is a very interest rate sensitive economy, but I'll tell you so after September 2001, after 9/11, in October and November were some of the biggest months in auto sales in the United States ever, because interest rates were slashed to zero by auto dealers, and it did spur, after such a tragedy, did spur people to move on. So you're right, 50 basis points doesn't do it, but there is some number, some threshold at which people get off the fence and say, okay, I thought I had to pay, I don't know, let's say 1 lakh rupees a month on mortgage payment for this, but it's actually 80,000 rupees. That's something I think I can take a risk on. So it does help. But you're right that the central thing has to be jobs growth. People's incomes have to rise. And that is one area, like I said, that I think we've not tackled well. The whole nation hasn't tackled well. And that is something that needs to be attacked in a major way.
And in a way, when I asked you about the model that we're going to follow, I think it ties in with whether it's going to be China. You said hope not, right? But can you build out a clear sort of scenario in terms of the recovery over the next 2 or 3 years?
Even in the United States, I would still use US as a quasi model, as a long, if I have to choose between China and US or Western Europe. I would still say, even now, even though we think that the US has come through this near-death crisis and the global financial crisis, unemployment rate is in the 5 handle. That's remarkable. That is remarkable. In Europe, I don't know in which century they'll even reach a 5 handle. Just not possible. And in China, whatever the number is, can you really totally trust it? That's really the unemployment rate. So all I'm saying is, when you somehow I'm feeling like a neoconservative economist was giving a lecture on market economies. I'm not that far right, but still, if I have to choose between the alternatives offered, when you let the private sector spirits unleashed fully, that is still the best recipe for jobs growth. Even in the United States, Ronald Reagan used to say this, the private sector was the one that added all the jobs. Now, between 1980 and 1988, in Reagan's time, I think they added like 16 million jobs, which as a percentage of the labor force was just remarkable. I think the government net was negative in those 8 years. It was all the private sector that added. And even in that, it's a lot of small and middle size companies that did the jobs growth. That's the thing we should be aspiring. It actually plays so well with our current sociological setup also. Yes. You have a lot of mom and pop stores, you have a lot of family businesses, but right now they're only employing cousins and nephews and nieces. They need to aspire to be a 1,000 employee company or 5,000 employee company.
But on that US point, unemployment rate being 5% or so, two things. One, it's the way they count the unemployment. I mean, people who are unemployed, right? I mean, after a while, you just stop trying, so you don't get counted. And the second is, according to one study, 80% of the new jobs, the job additions are happening in the lowest sort of income categories, right? I mean, logistics, handling, waitresses, janitors. So, I mean, some have said it, the hollowing out of the American middle class. That's the recovery that you're seeing.
Prashant, this criticism I've heard about the US for the 24 years that I've been in the markets, 17 of them in the US. From 1990, I used to keep hearing this constantly. These are low-paying jobs, low-pay. You know what? Even those low-paying jobs were paying well enough that people were taking them, and the S&P went from 400 to over 2,000.
No, I'm saying, so the markets may do just fine, and they might go to whatever, right? But I'm saying...
but it's net job growth. It's the alternative to that. A guy is not going to stay at home saying, unless I get a chief information officer job, I'm not taking a job. It's still net job growth. The culture is go out and work. From teenage years, go out and work. I think we just miles away from that.
Yeah, $2 an hour.
No, minimum wage now is something like $9 an hour.
Right.
So the point is, it's a culture of go out and work, right from your teenage years, put yourself through college working. We are not even absorbing our engineers who are graduating out of some sort of middle tier engineering colleges. We're not able to absorb them properly.
Sure.
And that is a very serious shortcoming in our economic growth right now. That needs to be tackled. And I think that'll be an important difference.
Okay. So you're bullish, right? I mean, I want to move on to
I am bullish,
global.
yes.
You're bullish about prospects for India and equities and most asset classes.
Yes. I had said, I don't know, many months ago, right around the election, that the market should double in 5 years. It looks like it'll even do it faster than that. This was from before.
And do you think this is
from the election date?
A structural, whatever it means, bull market, secular structural bull market?
Yeah, whatever that means. We are in a bull market for sure. Right. We are in a bull market. You could probably use the term secular in the sense that it is a generational kind of a thing. We are in high growth scenario. The other big thing that I've talked about at several different places is the equity participation by households is minuscule in India. We always keep looking at FIIs.
Yeah. But that's changing now, because
so in the last 6 months you've started now getting some money. I think it's $6 billion. But $6 billion is still pittance. In a $2 trillion GDP, and let's say our savings ratio is 30%. And so let's say 5% of savings, 5% out of the 30% should go into equities in a year. And for a young country like India, that should happen. That would be a large number. That would be tens of billions of dollars. That's what should be going. We shouldn't even worry about whether FIIs are coming in at 15 billion or 20 billion. This thing should just swamp it. So that still needs to kick in. I think slowly it's happening. As gold and real estate sort of sheen has come off, I think it's slowly happening that people are looking at equities as a longer term asset.
What's your view on the global market? I mean, we were very worried about QE taper and all that is gone now, although we're still awaiting the first rate hike in the US. And many now believe that the dollar is set for a massive rally because, I mean, Europe is just about starting maybe to buy sovereign bonds, and what US is now exiting out of.
I mean, frankly, I had been expecting a dollar rally for a year and a half before it started, so I was wrong for the first year and a half. My view is this energy story in the US is a very powerful story. It's a very powerful story. It changes the current account outlook and the political balance of power in the world dramatically if US is no longer dependent on imported oil. So I think this is massively dollar bullish. Also from just your own cost of living and anecdotal stuff in some of the Western European countries, Australia, Canada, given where those currencies are gone, Swiss franc, they clearly were extreme moves, and those have to be corrected. So I think the dollar will go through a multi-year bull market. There is a pretty antagonistic political setup there right now. The recent elections, the president's party lost very badly. We need to make sure that economic growth there continues. So I think dollar will do well. I think global equity markets will be fine. I think the Federal Reserve actually tapering is a sign of strength. I think we've somehow gotten too attached to the dots forecast from the FOMC and whether they'll go in March or June.
So if the dollar, say for example, the index goes to 120, right? You're saying equity markets will be okay, emerging markets will be okay?
I think people will start making distinction between dollar versus the majors and dollar versus EM currencies. So dollar versus the majors, I think the other majors will weaken a lot more. In EM currencies also, actually there's a good dispersion. So you've seen the Brazilian real, for example, do very badly in the last few months. And on charts it looks like it could, now with the old president back again, it's possible that that currency remains weak for quite some time. Mexican peso, Korean won, you look at any of these charts, they do look weak. But the Indian rupee, for example, again because of those fundamentals that we were talking about earlier, that's been very much in favor. So people will make distinction between currencies. Ruble obviously has been a basket case. So people will make distinction between those currencies. And the equity market will just respond to its own fundamentals. How is the underlying earnings doing?
But historically, a big dollar rally has, been pretty bad for emerging markets, right?
There have been episodes. Prashant, I would not draw too much. Like I said, firstly, every country will be treated differently. Okay. There have been episodes. You'll remember the strong dollar policy under Treasury Secretary Rubin. And that was a globally positive equity market around the world at that time. So there are reasons. This is a very shorthand a lot of people use, that strong dollar means risk off, but that applies in certain episodes. I would not stretch that lesson too far. People will get back to fundamentals and they will make very country specific decisions. So a Brazil or a South Africa or a Russia will be treated very differently from an India or a Mexico.
And for you, the biggest thing is this the oil thing, right? What's happening?
I think that's just remarkable. That is a remarkable story, and we're all beneficiaries of that. Yeah. Even India. Actually,
the biggest thing for India, which has been oil and commodity price fall, right? For no real effort made by the government.
Exactly. This is a completely exogenous factor. So anything that we ascribe to our actions, I think, is a little bit maybe haughty, but
maybe like the RBI claiming credit for the fall in inflation.
Don't get me into trouble. Do not get me into trouble. I'm just simply saying that these are actions beyond our control. Yeah. In the beginning of the year, there was so much talk about inflationary expectations, and that's kind of gotten a quiet burial. Those inflationary expectations are still sky high, and that was one of the questions we had at that time. But that's kind of been quietly dropped, saying maybe we move from the household survey to just asking professionals. So anyway, we got lucky. In trading, we always say it's better to be lucky than to be smart. So it's okay. You take the good fortune with it, but then you capitalize on it. Like doing the diesel deregulation on the back of falling commodity prices. That's the way to capitalize. That's a smart way to do it.
But you think it'll stay when oil it won't go up. I think that's your view. But if oil were to go back to 100, you think they'd still allow
they should.
Retail prices to float up?
They must. Otherwise, what's the deregulation? Then this was really...
So that's the other point.
That's just then fooling the people, right? Yeah. That's what deregulation means, that even when they go up, because it's a burden on the exchequer. Yeah. Even Prime Minister Manmohan Singh had made this point, that this ultimately costs money. It's going out of the government's coffers, but it costs money. And money doesn't grow on trees, as he said. So this is something that, and again, I think we don't give sufficient credit to household that they will not understand this. They understand it. They balance their budget every month. They do a better job of balancing their budgets than governments do. So households understand this. You have to stop treating them like children and actually explain it to them like adults, saying this costs money. This is what it is. And in the process, thus, if their spending behavior changes, their own consumption of expensive fuel changes, that's exactly how supply and demand is supposed to work. Maybe they substitute away to other fuels, right? That's how it's supposed to work.
What's the biggest risk, according to you, for this thesis, bullish thesis?
Well, like I said, the job thing we have to tackle. That is very important. The other is the lineup that's there. I hope it stays there and it stays motivated. And every 6 months it needs to do some shake-up. Otherwise, there is this tendency, once you're in power, I'm sure power goes to your head. And there can be this tendency of, we've arrived. But that keeping your feet to the fire and saying, we need to keep doing something dramatic every 6 months to tell the system that we are here to shake things up, that is important. If they fall into a complacency, then there'll be a problem. I think the chances of that are low because the current government's views are set for the next 10 to 15 years. So they would be looking for the next elections also. And they know they'll only get elected if they perform well. So I think that's fine. I hope everybody stays engaged and in their seats. For example, I hope there isn't some dramatic turnover at the RBI or whatever, because the governor is very highly regarded. And if same thing in the ministries, if they stay engaged and they're in their seats, then I think our outlook is good.
You think the budget needs to be a big one this time?
It needs to be, absolutely needs to be. They will not be given a free get out of jail card. I mean, this has to be an impressive one with a few, maybe even with a few controversial things. I mean, one of the things that I keep saying, shake things up, I'm using it as a euphemism for breaking glass, actually offend a few people. If you're not doing that, then you're really not doing anything dramatic. So take on to use the American phrase, sacred cows, and challenge some of those things. I think that is definitely important because people are looking for action on that front. We're actually
Give me an example. I mean, something that you think.
So, for example, the diesel deregulation, that was a useful thing to do.
No, things that you think they should tackle in the budget.
I think if they do something on, for example, the public sector banks, making them a lot more efficient. There are several ways of doing that. That will be a big plus. Something more harsh on corporate defaulters. Right now there's talk, but really some severe stuff on that front. I think again improves corporate governance. Maybe something even on our overall national commodity hedging policy and things like that. Right now, because commodity prices are falling, that's gone off the table. But at one stage, that was very important. That's something, for example, China does well. They go around acquiring physical assets, which has its drawbacks. But this is something we've never looked at. We are so susceptible to the price of oil. It moves our entire financial markets and thus our economy. And yet we don't really do anything in terms of, there are ways to at least make it a little less volatile for our finances.
Just to wrap it up, what are the big themes which you think will play out? You said it's a secular bull market. What are the big themes? E-commerce, of course, is getting money left, right and center.
Yeah, that actually may be getting a bit too hot, I'm not sure. Big themes obviously will be the asset management industry in India is too small compared to the size of the economy. It's too small, it's very tightly regulated for good reasons, because so far a lot of household investors were not savvy enough to be able to ask the right questions. But I think now that education and literacy is going around, the asset management industry needs to get much bigger. New financial products, I think, are important to bring in. It's still too conservative, a balance sheet of almost every household, which sounds like a safe thing. But actually, if you're looking at 30-year obligations, 30-year out, it's actually a dangerous thing to do, that you're just sitting in fixed deposits. That's actually an inflation-eating kind of thing. That needs to change. I think the whole center-state relationship, that's going to go through a dramatic change, especially with an ex-chief minister at the helm. It looks like the GST process is moving forward. That's very promising. I think there will be a more professionalization of and outsourcing of products of production out of public sector on the armed forces, on the defense side also. That is another way to bring a lot of efficiency. And so there's a lot of exciting stuff that will happen. And it's good that, again, the lineup that's there seems very open to doing these sort of shaking up things.
But it's great talking to you. Thanks very much for your time.
Always a pleasure. Thank you.